All right, it's Friday.
Yay.
We missed a week last week.
Yeah, well, there was a reason for that.
What was that?
We had just come off the big tax deadline, I think.
Yeah, that's true. Now we're in the middle of the little tax deadline for trusts.
Yes, followed by the next big tax deadline.
Yeah,
Our life is just full of deadlines. That's all we do is go
I
from
know.
deadline to deadline.
I know. I always hate the deadlines, but on the flip side, I always feel like, it gets you to get stuff done and out the door.
Deadlines get stuff done.
They do. It's funny how we started this. Maybe I already said this, but we started these conversations just because we were having regular meetings from our houses because we weren't seeing each other and we needed to stay in touch. Now it feels like we have these chats. We're both in the office.
Yeah, and I think we kind of started it because we were having coffee at 3 o'clock. And
Oh
we
yeah,
were
that's
like,
true.
oh yeah, there's some really good stuff we talk about. We should just record it, basically.
Yeah, that's true. That's true. Well, I had an idea for something to talk about today that is hopefully practical tips for clients. It feels like this is something you and I have talked about through the years on how to help our clients or how to fix this. When we do tax preparation for businesses, there's a good chunk of our fees that is spent on time putting in to get our clients' books ready so that you can basically prepare accurate returns.
Right.
And I just thought it'd be good to go over tips for how to for our client to keep their retained earnings reconciled from one year to the next if they use QuickBooks.
Okay. I mean, I think that we've often said that QuickBooks is great when used properly, but it can be a garbage in, garbage out situation where the stuff that you get, if you end up spending more time fixing it, it's not necessarily helpful.
Yeah. I mean, we don't want our clients to spend all their time figuring out how to become bookkeeping experts and how to become QuickBooks experts. They should be doing what they do best, and we're here to support them. And at the same time, there's some practical tips to kind of keep things cleaned up. And not only is it helpful for us, but it's really just good, solid practice. If you're producing financial statements for the banks and things like that,
yeah,
underwriters at banks notice these things when retained earnings don't tie out from one year to the next. So it's a credibility thing. It's just good practice.
Sure. Yep.
So I had a few steps that I had written down. So first step for clients to keep their retained earnings agreeing to ours is to record any adjusting journal entries that we book when we produce the tax returns. So when we get clients' records, we're often recording a couple of adjusting journal entries. Probably one of the most common one is depreciation expense for the year. And unless the client also books those things, records those journal entries, then their records aren't going to tie to our records
right
in the tax return.
Yeah, so I think, bugging our managers or making sure that you get copies of those journal entries so you can book those in there, that's key.
Yeah, and when we process our tax returns, there's a little checkbox on our processing form where we say send the adjusting journal entries to the client. So those are, almost always included in the package that we send out with the return. So look for those. And as a public service announcement, we're happy to help our clients book those adjusting journal entries. Email us or call us, and we can easily log into your system and just do that for you. Get those journal entries booked for you.
Yeah.
And then after you do that, the next step is to send us a copy of your financial statements after you recorded those things. Mm-hmm. It's a good idea for us to just give them a quick glance over. We'll do this free of charge, assuming that there's nothing too complicated. Just look them over, make sure they tie out, make sure we don't notice anything odd. So definitely, once you book those journal entries, send us a copy of your financial statements for the prior year so we can look them over.
So the key on all this is to make sure, we always want to check to make sure that the retained earnings ties out from one year to the next. And the retained earnings is an accumulation of all the income life to date, less any distributions or payments out life to date. And so we want to make sure that that ties out from one year to the next year. That way we know we've captured all of your deductions. So we don't want you to miss any deductions that might be available. And then also to make sure that we've captured all the income life to date. And so, I was going to say, one other thing to make sure of when you're doing that is that I think causes us the most problems that retained earnings doesn't tie out is when clients will go back and they'll delete prior year invoices or delete and move things around within QuickBooks. So once we've kind of established that cutoff of here's my books, I'm ready to go, it's really important that you don't go back into your prior QuickBooks years and make adjustments, either deleting invoices or deleting checks or moving checks from one year to the next. That causes retained earnings to be off, and we have to kind of investigate it.
Yeah, you skipped ahead to number 4 on my list, but yeah, that's exactly right. Just don't fix any old things by just directly editing them. If there's something that was done incorrectly or just that needs to be adjusted or fixed in a prior year, it's important to do that with an adjusting journal entry in the current year instead of going back and, like you said, editing a check or editing an invoice or something like that. Because the minute you edit some old transaction, now you've changed what you said, that accumulation of income and deduction, which is really the crux of keeping track of things from one year to the next.
Yeah. Yep.
And the last tip I had, which would have been a step before this, but will just prevent you from doing this, is in QuickBooks, lock your accounting out so that QuickBooks doesn't even let you do this.
Yes.
It doesn't have to be something where you set some crazy password that you never remember or anything like that. You just want QuickBooks to remind you, hey, you're editing a prior year. So in QuickBooks, you can go under, I should have looked this up. I think it's under company settings and advanced, I think. And there, don't quote me on that unless you may even remember it.
Is this on the record?
Yeah, no.
Or no?
Yeah, so it's company settings, and you can enter in there the date to lock, and basically, if we're in 2020 now, you would get our adjusting journal entries. You would record those as of 12/31/19. You'd send us a copy of the financial statements to make sure everything looks good, and then you would go in and you would lock QuickBooks as of December 31st, 19, to prevent anybody, you or your bookkeeper or anybody, from going in and tweaking those prior amounts. Because in the end, we have to research and figure those out and find them. Otherwise, the tax return doesn't balance and the IRS will take note.
Yeah. Do you know if you can do that in QuickBooks Online? Can you lock it as well? I'm assuming you can, but I don't think it's in the same area.
I think it is. Well, that's what I was speaking from.
Okay.
Was QuickBooks Online.
Remember, the desktop is exactly what you said. It was company, advanced, something like that.
Yeah. In fact, if we have anything else to discuss, I can probably look it up.
Well, I remember another preparer used to tell me that the password, like you said, isn't anything to keep you out. It's just to kind of get you to think about it before you hit save. Hey, this is going to impact retained earnings. And so they used to make a password on there of $500 because they told their clients, like, if you make a change here and I'm going to have to go back and fix it, it's going to cost you $500. So keep that in mind before you make a change to retained earnings or a prior account.
That is a great idea. So I'm looking this up.
Okay.
And I'm not seeing it. So if you want to, anything else, any other tips you have or ideas?
I think, for keeping your QuickBooks going, I think it's important, you're reconciling your bank account every month. Um, if you can reconcile your credit card account every month. I know that a lot of times we have clients when they book credit card stuff, they'll just book the credit card payment as opposed to the individual charges. And that works fine when you pay the credit card off every month, because then you're capturing every one of your transactions. But if you're just recording the payments and you carry a balance, it's hard to distinguish, well, that payment was for what charges. It could be materials, it could be supplies, and if the payment doesn't match up what it was exactly charged, it takes us extra time to try to figure out what your ending balance is. So I think best practice for sure in QuickBooks is to make sure you are entering every credit card transaction. And it's really easy to do, and especially with QuickBooks Online. I guess that would be another tip, is make sure you're using the bank download feature, so that you're downloading your credit card transactions, you're downloading your bank, and then it's very easy to select the proper account, and you can automatically move those in, and QuickBooks learns what vendor belongs to what expense account, and so it's a snap to get your transactions into QuickBooks.
Yeah. So it's specifically QuickBooks Online, if you want to lock the prior year, you go to settings, you go under your company, you go under account and settings, and then you go under advanced, and there's a field right there under accounting called close the books. And there you just edit it and enter the date that it's going to be closed as of, and then it just basically locks you out from making those changes. So yeah.
Online is really, it's gotten so much better. I mean, when we first started using it, probably 2008, whatever, you couldn't get a detailed general ledger. The financials looked wonky. Now it's pretty great. I mean, you can get a lot of the reports that you want. And the other really cool feature is, usually you have somebody user license. You can actually set us up as a user, as you're an accountant, and I don't think that uses up one of your licenses. So
Right. Yep.
That's a really nice feature to allow us to go on, as you mentioned, Paul, to be able to book those journal entries. We don't have to either go to your office to do that. We don't have to arrange a special time to do a go-to meeting or go to assist. We can just automatically go on there and book those journal entries for you.
Yep. Well, hopefully that helps people kind of just basic retained earnings, keeping retained earnings tied out. That's a big help for us.
Yep, absolutely.
You got any fun plans for the weekend? You were preparing trust returns this weekend?
No, I think I'm pretty good. So pretty close. I'm waiting for somebody to get back to me with some information, but yeah, I think I got 4 left.
Good.
Yeah, you?
Likewise.
I'm hopefully watching some football on Sunday, and yeah.
Yeah, I think both of our baseball teams are officially eliminated at this point.
No, because the Astros won.
Yeah, Astros won last night.
We didn't deserve it, but
We didn't? Is that what you said, or they don't?
my team didn't deserve
Yeah, but neither do the Astros. They don't deserve
it. Because they're cheaters. Okay.
That's right. All right. Well,
All right.
you can-
See you later.